Welcome everyone to Endgame Finance. Today I want to talk to you about one new stock I will be purchasing. I will be buying this stock in increments, so that means I will not just be making one big purchase. Rather, I will be buying this stock in pieces. So basically, I will be dollar cash averaging this stock. I will be buying over a period of probably a year, just because I see huge potential in this stock over the next decade. And this is not Tesla or Rivian, so this is a fairly new stock. I've been actually watching them for a while, and I've decided it's time to start buying a little bit piece by piece. And just, I really want to get into this stock, and I really want to build this into one of my bigger positions of my all total holdings. So this stock is also in transport, just like Tesla and Rivian, but they do not manufacture cars. So the stock I'm talking about is Uber. Uber Technologies provides ride hailing services, food delivery, and freight transport. And I believe they're also getting into groceries. So basically, they'll be delivering people's groceries. And it was just recently announced that people will be able to use their SNAP benefits to purchase groceries from Uber, or rather have Uber deliver them. So basically, cash assistance from government will actually go towards some of the revenue that Uber is building out. And I believe Uber is also moving into last mile delivery. So basically, those packages that Amazon is delivering, they will be now shipped through Uber, or at least some part of them. So if you're buying something from Walmart, Target, or Amazon, there's a chance that an Uber driver now might start delivering these packages. This last mile delivery is a multi-billion dollar industry. So I expect all of these faucets, all of these aspects of Uber business just to contribute tremendously to the overall revenue growth that Uber will experience over the next decade. So basically, Uber turned $33.6 billion worth of bookings into revenue of $9.2 billion last quarter, up 16 and 14% respectively. It then turned that revenue into $394 million worth of net income of earnings of 0.18 cents. So Uber is just now starting to turn a profit. They've been basically growing so fast that they sacrifice some net income just to increase their revenue and just to capture so much of the market. They are now in 70 countries and over 10,000 cities. So they went into hyper growth mode in order to generate revenues. And now they're turning all those revenues into cash. For more such growth going forward, analysts believe revenues will grow 18% this year. That's pretty good, translating it into earnings of 34 cents per share. So basically, they're going to keep generating more and more net cash. So we can see revenues here. Revenues are projected to reach over $60 billion in about 2 years. And Uber's market cap currently is around $80 billion. So in a short few years, Uber at this market cap will be trading at only 1x revenues. Now that's pretty cheap for a technology company that's also growing. I do realize their growth has been decelerating, so they're not growing at clips of 100% per year. However, Uber is still a tech company, and tech companies usually require a premium of 5x revenues at least. I believe Tesla for a long time was trading at 20x revenues, as well as other tech companies on par with Tesla, such as Facebook, such as Google, such as Netflix. All of these guys have demanded usually a 10x premium over their revenues. So, by these metrics, even with the slower growth, Uber looks pretty cheap here. Uber looks a little bit undervalued. I would say a fair price for Uber would be at least 2 to 3x. However, we are in a recessionary period in our economy, and growth might slow down exponentially over the next few years. So a lot of people are being very cautious in these tech companies, in these high growth companies, because Uber is dependent. Uber is the fuel of the economy. If the economy slows down, there won't be need for such fuel. There won't be need for as much transportation, for package deliveries, for food deliveries. So growth might drastically slow down. And that's why I believe Uber is currently stagnating. The business has still only scratched the surface of its ultimate opportunity. A forecast from Acumen Research and Consulting suggests the global ride-hailing market will grow at an annualized pace of 17% through 2030. Ride-sharing business will just keep on growing further and further, especially with the current car prices, vehicle prices, and fuel prices. it might actually be cheaper for many people just to use the Uber from now on instead of driving. And I believe at some point, if not already, Uber has or will unveil a subscription service. Basically, if you know your route every day, where you're gonna go to work, where you're gonna go over the weekend, you can just subscribe to Uber service. They will pick you up every single day and drop you off for a fixed price. So I see Uber just hitting those reoccurring revenues on top of everything else. The world is certainly still ready for more convenient mobility options of all types and purposes. For instance, Straits research suggests the world's complicated last mile logistics market is apt to grow at an annualized pace of more than 11%. Through 2030, as more and more retailers use shipping options to remain competitive, it's a market that's perfectly suited for Uber's mostly localized neighborhood drivers. So, like I was saying in the beginning, this is a huge market opportunity for Uber. This has the potential to generate additional billions, if not tens of billions of dollars in the next decade alone. And that will just keep on growing in conjunction with everything else Uber does, such as Uber Freight, where basically they manage the logistics for trucking services, for Uber Eats, for Uber grocery deliveries, and their ride hailing business, which has been the primary driver of their growth so far. However, there are major risks on the horizon for Uber. Main risk being that ongoing regulatory battle will reclassify Uber's so-called gig workers into full-blown employees. Categorization of contract workers would raise companies' operating costs rather drastically. This headwind has abated somewhat in the United States, at least for the time being, but is now blowing briskly in Europe. The issue may never go away. There will be a huge overhang for Uber for the years to come if the regulatory bodies just might come hard down on them and just basically reclassify gig workers, regular employees. Uber has says that would probably raise their costs around 40%, and it would cost at least 50% reduction in Uber drivers in the regions where this is implemented. But so far, Uber has successfully navigated the matter while continuing to improve and expand its existing service offerings. So, regulatory overhang has been an issue for some time. However, Uber has really tackled this. They've been fighting this in courts and they've been basically just winning. So far, they've remained as gig workers, and I believe gig economy is a huge part of what's going to come into the future. Basically, gig economy is the reason why you have such a low unemployment. So instead of going to all these job interviews, instead of doing all this testing, instead of going through all these dozens of steps just to gain employment, you can basically download an app, fill out an application, and you're just working within a matter of a few days. You don't have to wait week one, week two for multiple interviews. You can just start working. This is true for Uber Eats. This is true for Postmates. This is true for DoorDash. So the gig economy is the primary driver of low unemployment, and it has solved so many inefficiencies in our economy. Basically, there was a huge demand for transportation, for ride hailing services that was just not being met just because of so many regulations and inefficiencies. And we have this gig economy just basically move in and just fill those inefficiencies and basically balances the economy to a better, fuller employment rate. So gig economy will continue into the future and it will be a primary driver of low unemployment. That's why I don't see unemployment really rising in the near future, just because it's so much easier now just to join the workforce. You don't have to worry about all these other things. You can just basically start the next day. And same is true for Amazon as well. If you want to be a driver, last mile driver for Amazon, you basically just download an app, you fill out an application, and in a few days, you just basically go to your app. They tell you where to go, which packages to pick up, where to drop them off, and you get paid. There's no hassle. There's no going to one place, other place to get your paycheck. You don't have to go get the documents. You don't have to clock in here or there. It's just done in the app. You just go through the app tells you what to do, you do it, and you get the money. Basically, that's why I'm really optimistic about Uber and all their aspects and all their different businesses, just because they're going to grow so much into the future and they're making the economy so much more efficient. So, over the next year, I will be buying Uber in small increments. I will be buying few shares at a time. If this company keeps going down or up, it won't matter because I will be dollar cost averaging. And I just see so much potential in this business. And I do see him as trading at a discount currently just because there will be such high growth into the future. So that's it, guys. I just wanted to let you know about one more stock I will be buying. I've been pretty heavily buying Rivian. I've been pretty heavily buying Tesla. And I will be adding Uber to this list. I will be dollar cost averaging. If you guys own Uber or want to comment or let me know what you think about the company, let me know below. Guys, like, subscribe, and share. And as always, have a great day.